Hi, and welcome to Tax Vibe, podcast by the Tax Institute. I'm Robyn Jacobson, the Senior Advocate at the Tax Institute and the host of Tax Vibe. On the show, I chat with some of the tax profession's greatest minds, drawing each of the guests' unique perspectives to give you valuable and practical insights you may not hear every day. We hope you enjoy this episode of Tax Vibe. Today, I'm joined live in person at the South Australian Tax Forum by Tim Sandow, CTA, tax partner at BDO in Adelaide. Tim has more than 30 years of experience as a tax professional, including 25 years at the Big Four. He provides income tax-related advice to a wide variety of private and large public companies, as well as multinationals. He has advised on mergers and acquisitions, tax governance, corporate tax, international tax, and employment tax issues. Tim is the partner leading BDO's National Tax Risk and Ethics Group. Tim is also the National Vice President of the Tax Institute for 2024 and is the South Australian representative on the National Board of the Tax Institute. Tim is a Chartered Tax Advisor with the Tax Institute and a Chartered Accountant with Chartered Accountants Australia and New Zealand. Tim, welcome to Tax Vibe in person at the Stadium.
Thank you, Robyn. It's lovely to be here. And looking forward to the discussion today around risk and ethics. And I will say the opinions I've shared today are my opinions, not necessarily those of the Tax Institute and not necessarily those of the BDO.
Thank you. So we are speaking, I'll just make this comment, from the Sir Donald Bradman Pavilion. So this is quite an esteemed place we're sitting in today.
Exactly. We're on hallowed turf.
Absolutely. Yeah. All right. So a bit of scene setting. We've had a lot of attention squarely focused on the tax profession for the last 12 to 18 months. Yep. And it's been in the media, it's been in political circles, governance has come under the spotlight, and of course, professional or unprofessional conduct of particular practitioners. So we're not going to go into the specifics of that today. But in terms of where this has taken us and the journey we've been on over the last 12 to 18 months, you've got a lot of background in managing risk and ethics of practitioners, and I'm really keen to explore that with you and unpack that further. But if we look at the reforms that are coming through the legislative landscape now, I think it's important we acknowledge that some of this was well in play before the revelations during 2023. So if we go back to 2019, there was a review of the TPB, the Tax Practitioners Board. There were 28 recommendations made, and 5 of those made their way, and others are still to come, into what I'm calling Tranche 1. So this is the Treasury Laws Amendment 2023 Measures Number 1 bill. So a bit of a mouthful. Yep. And that bill has a number of measures in it, and I'm not going to go through all those particular measures, but things like disqualified entities and not being able to take people on without getting prior approval from the board who are disqualified. But what we also saw last year, because of the revelations during the year, is some amendments made to that bill in November. And these amendments to that bill number 1 were made by Barbara Pocock, Senator Pocock, and they deal with what we call the Dobbin provisions. Now, that's the vernacular. The formal term is the breach reporting rules. And I just want to mention all this as we get underway because I think it does set the scene for where the rest of this conversation is going to go.
Yep.
Those rules were introduced into that bill without any warning and without consultation. And the main concern that we've got is around the breach reporting rules.
Yep.
We're still to receive guidance from the TPB as to what those rules are going to look like and how they're going to be played out in practice and what sort of guidance we're going to get. But in terms of the administration, I know that it's something a lot of practitioners are concerned about. And then we've got the whole second tranche of measures, which did come out of the revelations of last year, and that's what I'm calling the second tranche. And this is all the promoter penalties and the information sharing, etc., powers of the TPB and greater sanctions. So there's been a lot of movement. Some of it's enacted as law. Some of it has already started on the 1st of January. Some of it starts 1 July this year, and some of it is still to come. So your initial reaction to all of this progression of legislation?
Yeah, look, Robyn, I think you're right. I think that the events of last year really sort of was almost like that lightning bolt out of the storm cloud that brought it all to a head. I think the community's expectations around tax practitioners has probably gone up a step. I think it's pretty interesting. I think that nobody likes paying more tax than they should. and they expect their accountants to tell them about, well, what are the opportunities I've got to save some tax? But I think there is a line there, and it's about where do you actually cross that line. But I guess the other comment I have just about what we saw, particularly towards the end of last year, was there were a couple of changes which I thought were a little bit reactionary and maybe not really addressing the real issue what the real issue was. And for example, the changes to community representations on tax practitioners board, limiting that to firms of under 100 people. I just thought if the issue here is about managing conflicts of interest, that's actually not addressing what the issue is. And so it's very hard to see how you can have community representatives when you're excluding a portion of the community that they should be representing.
And there would be an outcry if there was let's say a TPB board that was completely represented by Big Four or even second-tier firms and no one from the SME sector. But conversely, there shouldn't be a board made up of only SME practitioners and no one from the Big Four.
That's right. And I think that's where it's about really understanding what's the core issue that we're worried about, and is the remedy addressing what that core issue is. And I just wonder, with some of the things we're seeing coming through now, particularly when there's very little time to make a submission and consultation, whether it's just being a little bit rushed and reactionary.
Is it fair to say that what happened throughout last year, or the revelations last year, I should say, because the events obviously go back many years before that, highlighted some drawbacks in the system? There were some areas where it was clear that the TPB was not able to share certain information, and same with the ATO. So has the pendulum swung too far in trying to respond to some of those deficiencies in the current framework?
Yeah, look, I think it is. I mean, I think the average person on the street would probably be surprised by some of that sort of thing, that you don't have this sort of communication channel between Treasury, the ATO and TPB. So in some ways, that sort of information sharing doesn't feel like it's a surprise. So like it'll be interesting to see how that does evolve, I think. And obviously we're seeing an enormous number of resources now being allocated to the TPB, both in terms of the number of employees they have, but then also the technology that they'll be investing in. We are going to feel like we are being monitored.
So talk to me about loopholes. It's an expression that is tossed around from time to time.
Yeah.
They can be defined in many different ways, but what is the responsibility of practitioners when it comes to either actual or perceived loopholes?
Yeah, and I guess there's a lot of emotion in some of these words, because usually they talk about exploiting loopholes, and it's the large companies and the multinationals and the big tax advisors who are all about exploiting loopholes. So I think what I would say is, there's very few really genuine loopholes, and they tend to exist for a short period of time and then they get shut down. So my caution to someone who feels like they've found a loophole is to really examine it very carefully, because what I often find is I'll come up with a really brilliant idea, or someone else will come to me with a really brilliant idea, and then we'll say, but have you thought of? And there'll be an integrity measure which could apply. And I think I'm going to talk a bit about, as we go through today, about the power of the network, of having a really good, strong network, because what I find is that it's very hard to have all the knowledge in your own head. And so often when you're talking to somebody else, you can actually draw out, what is it that I'm missing here? So I think my first caution would be, is it really a loophole, or is there something already in the law that's going to counter it? I think the next thing I'd be looking at would be to say, okay, well, look, maybe it is a grey area, a genuinely grey area. My next question is, well, is there a reasonably arguable position? And is it just a reasonably arguable position, or is it a very solid position? I think though then there's the next question about a discussion with our clients to say, look, this is genuinely a grey area. And I always like to talk to clients about having an eye to the bigger picture. Too often I've seen tax planning and loopholes and stuff being exploited where they save a small amount of tax now, but the long-term consequences are quite large. And particularly if you're working with a client who might have a terrific business, they want to sell it, or they want to do an IPO. And we come in and we say, look, if you want to sell your business, the tax outcome from selling the shares in this company are significantly better than selling the assets. But if you want to sell the shares, that company needs to be squeaky clean. And so if there's something in there that looks like a tax dodge or a position that someone's taken, even if the current advisor says that's a reasonably arguable position, the purchaser's going to look at it and go, you know what, I'm either going to hold back some money or the deal doesn't go ahead. So saving that small amount of tax in the short term can have some really big long-term consequences. So I think that we just need to be really careful about, exploiting tax loopholes, about are they really genuinely there? And maybe a test for that is, would I be confident if I went to the tax office to ask for a private ruling that the ATO would agree? And sometimes they do. I mean, you look back in time, for instance, when the rights to future income provision came out in 2010 in tax consolidations, there was billions of dollars of tax deductions that were claimed at that time because the law didn't apply in the way that it was intended, and then it was shut down. So from time to time, those loopholes exist, but just tread really carefully.
Look, you make the point too about having a network around you that you can draw on, and it's so important because as experienced practitioners, we know that classic tax law, there'll be a rule, there'll be an exception to that rule, and then there'll be an exception to the exception.
Correct.
And if you're really lucky, you'll find a fourth one.
That's right.
Younger practitioners or those who are perhaps not as technically proficient or don't spend their lives buried in the law itself may not have the visibility over some of those deeper provisions that provide the exceptions or exceptions to exceptions.
Yeah.
So that's why reaching out to your networks and saying, look, has anyone encountered this or is there anything I've missed? It's such an important question to ask.
It really is. And I guess what I find as I'm becoming more experienced is that I don't need to know everything, but if something feels a bit too good to be true, like if someone comes to me and says, I don't think this is taxable, I think we get a deduction for that, whatever it might be. And I go, I remember that law coming out and I don't think that's the way it was supposed to apply. So if it feels too good to be true, I think that's when you really start asking some deep questions.
And look, let's link it back to obligations here. We have an item, as they are referred to in the Code of Professional Conduct in the Tax Agent Services Act, and it requires you to act lawfully in the best interests of your client.
Yes.
So it's not just act in the best interests of your client, it's act lawfully in the best interests of your client.
Yes, yeah. And I think the lawfully thing is the really important bit. It's, and the way I kind of look at that is I think if I've gone through that process that I talked about before, and there is something that exists and it is lawful, then I think to act lawfully in the best interest of my client would suggest that I should talk to the client about it. But I think this is where that communication with your client becomes really important, because that's when we can talk to the client and say, look, lawfully I think this exists, but there is a risk here. And then we can talk about what that risk might be and, whether that's something that we want to pursue. And it is interesting. And, if I look at what's happening globally, because this is not an Australian-only issue, the International Ethics Standards Board for Accountants has been looking at tax planning and whether there should be this overriding public interest test. It's the discussion paper that I put out, it's very hard to articulate what in the public interest means. So, and I'm sort of conscious as well that, if you look at, for instance, the recent AusNet case and about reading the legislation as it's written and how you introduce other materials, including rulings, the statutory interpretation part becomes critical. I've had instances where, I've gone to the ATO to say, look, in my fact situation, I don't think the law is applying properly. And quite rightly, they've said, Tim, I understand it's a bit unfair in your situation, but we have to interpret the law as it's written.
Yeah.
But I think that goes both ways as well. So if the law is clear, then I think that the public, while there may not be an overriding public interest test, I think that the way they're articulating it is to say, you need to talk to your client and explain what the risks are.
I want to draw something else out. You talked about lawfully, we discussed that particular word. When I think of tax evasion, to me that's acting outside the letter of the law.
Yes.
Part 4A and the general anti-avoidance rules and other anti-avoidance rules and integrity measures, to me is where you're acting within the letter of the law, but outside the spirit of the law.
Yes.
So when we're talking acting lawfully in the best interests of your clients, are we talking the letter of the law or also the spirit of the law?
Look, I think we have to be mindful to both.
Yeah.
And I think if we're acting outside of the spirit of the law, I think we need to be very mindful of are we 100% confident that this is what we want to do?
I'm a client. I come in, I give you a whole bunch of information. It could be in written form. I might be conveying things verbally to you. Can you rely on what I'm telling you?
Yeah, look, this is a really interesting one. And again, under the Code of Conduct, we're required to take reasonable care. So reasonable care, what is reasonable care? If you look through the guidance, it talks about exercising professional judgment. Again, what's exercising professional judgment? So if a client brings in a whole stack of information, I'm not required to do an audit. I don't have to verify every piece of information that they've brought in. But I am expected to look at that with professional judgment and skepticism and say, what do I know about this person? What do I know about the industry that they operate in? It's almost like sort of standing back and saying, I think for me, professional judgment is about standing back and saying, before that client walks in, what am I expecting to see? And if it broadly aligns with, if what they give me broadly aligns, then I can probably largely accept what they're telling me. If something looks unusual, I think that's when this professional judgment skepticism steps in. So, yes, I think you can accept what people tell you, providing there's nothing that's really flagging, there's no red flag that thinks, that doesn't quite sound right.
And tax agents are not auditors.
Correct.
So they're not required to go through an audit and sign off and certify that everything is true and correct in that respect. But in what circumstances is further investigation warranted? When are you supposed to dive deeper or ask further questions?
Yeah. Look, it's a good question, Robyn. I think that, as I said before, when something doesn't look and feel right, so look, an example for this might be, particularly have examples where, if I'm preparing the accounts and I know absolutely everything that's in there, then I probably know I'm not just accepting it. If, for example, I've got a client who's got their own bookkeeper or they've got their own accounting team and they present me with a trial balance or a draft set of accounts, they might say, look, we don't want you to have a look at legal fees, for instance. And I might say, oh, okay, well, let's just have a look. Or that's, I might go, oh, well, that's only $3,000 or whatever. That's probably to do with leases or something, I can accept that. If that number was $3,000 last year and it's $500,000 this year, I don't think I can just accept that.
Yeah.
So I think that, in fact, I had talking to an accountant recently and they had that situation and they'd actually found out that the owner of the business had put it through all of their family law expenses that for the divorce they were going through. They'd put through their company. So, and he said, well, I was protecting my company from my spouse, so it should be deductible.
Oh dear.
No.
And until I can think of another anecdote, I heard of a firm that took over another small practice, and in doing so, they picked up the balance sheets of lots of their new clients and were having a look, and there was a property sitting on the books. And so they just asked through normal due diligence, what's this property? What do you use it for? Where is it located, etc. Well, it turns out that property had been sold some years prior and for whatever reason had not been correctly accounted for. And it meant that the property that was showing as the debit on the balance sheet was in fact a debit loan because the proceeds on sale had been taken out by the shareholders. So it was a Division 7A problem.
Yep.
And without asking the right questions, you don't unveil these things.
No, that's right. And I think that's where there is a real role for experience. And again, a role for talking to other people and just saying, sometimes the professional judgment is also talking to somebody else and saying, does this feel right to you? And it's amazing how many times you can talk to a colleague or even another member and just say, in your experience, do you feel this is right? And it's amazing how often that conversation, they might say, oh, no, that often happens in this industry or whatever it might be. But a conversation you can have with someone is just gold.
Yes. Tim, next scenario. I'm your client. You've given me some advice and I don't like it. I don't want you to lodge my return on that basis, or I'm insisting that you do claim something that shouldn't be claimed. What do you do now?
Yeah, this is a really tricky one, Robyn, because the correct answer is to say, I'm going to refuse to lodge the return. And I think that's sort of, even more important. We saw the end of last year, the exposure draft on the code of conduct that came out, where it really reinforced that a tax agent must not make a false and misleading statement to the commissioner, which includes lodging a tax return. Yeah. So if that number, but it does talk in there about material amounts as well. There's no expectation that we're always absolutely perfect. But I think that if the client's refusing to follow our advice and wants us to lodge that return, then I think the way I like to look at this, and I've got a colleague who describes this really well. She says, how will you feel in 3 years' time looking back at what you did? And I think that making that test, like, what will the future Tim feel like looking back, is a really good way of looking at it, because if I'm going to lodge that return and feel sick in my stomach that I've done it, I think that's telling me I shouldn't do it. If I'm looking at it and thinking, well, it's only a very small amount, there is an argument, I can sort of almost get there. I'll talk to somebody and see what they say. Maybe I can get there. But I do like this idea of the future self-test. How do I feel looking back about what I've done? If I'm going to feel sick that, the ATO might review it, then I think that's a really big test. And the other thing I'd say, of course, that client could go to another accountant and if that other accountant picks it up, maybe they're going to dob me in under these new dob-in rules. So I think that doing something now which you're not comfortable about, you don't just have the risk of the tax office picking it up. You've got the risk of somebody else, a fellow tax agent picking it up and them feeling compelled to dob you in.
All right, so you've slept on it, it doesn't sit well with you, but you've decided to claim it anyway. Then there's clearly a problem with your conduct as well as me as a taxpayer. If, however, you say, no, Robyn, you're not allowed to claim it, and that's my advice, does it change anything if I represent a really big chunk of your fees? I'm a long-term client. We've had a great relationship. You've looked after my affairs and that of my family or my business interests for 30 years.
That's right. And you referred me off to your friends and our clients as well. And yeah, look, and this is where that sort of, when we know the right answer is not to lodge the tax return, becomes so much more difficult. The comment I'd have about that is I still think you have to sit back and think about, what does this do to my reputation? Do I want to be known as the person that can be walked over and lodge the tax return anyway? We'll talk a little bit later about reputation, but for me personally, I kind of think I've spent 30 years building a reputation. Am I prepared to let that go for the sake of lodging a tax return with an extra deduction in it? And I try and weigh that up against the fees from the client and whatever. It's really going to be the case that it's worth it.
Well, you're weighing up on one hand, trying to look after one client supposedly, versus putting at risk your entire practice.
Your entire practice, your entire career. And I doubt that client will be there to support you when it all goes to pot.
Yeah. Agreed. All right. So moving on to the next bit. What duties do you have as a practitioner when you pick up a new client?
Yeah, look, and I think this is getting a little bit interesting at the moment, because the ATO has put out their best practice principles, which were aimed at the Big Four, and the Big Four signed up to them about 18 months ago. And now the ATO is having conversations with the mid-tier firms, so firms like ours and others, about whether we would also like to adopt these and make a statement on our website that we've adopted the ATO's best practice principles. In some ways, the best practice principles are really restating a lot of the stuff we know already. They're very consistent with both the tax agent's code of conduct and also with the accounting body's ethical standards. So they're very consistent with that. One of the things they do talk about, though, is effectively you should not be taking a position unless there's a reasonably arguable position. They also talk about, if you're picking up a new client, you should be looking at what they've done in the past to see if they've also been adopting reasonably arguable positions or what they've done in the past. So to me, that puts an extra layer on top of what we probably already would have done. I think that often we might have just picked up a new client and accepted what they've done in the past and focused on the future. So this is sort of suggesting there's an extra obligation to go back and have a look. The that, of course, becomes even more so if for instance, there's been a position that's taken in the past which has an ongoing implications for tax returns that I might lodge now.
E.g. Division 7A. So let's assume, again, I've walked through the door, and the first thing you do is look at my company's balance sheet, and you find there's a Division 7A loan from 3 years ago that has not been placed on complying terms, and there's no evidence that that amount was included as a deemed dividend in that year's tax return. So we've got a problem. Or, look, let's go two ways. We've got an issue with it not being declared a dividend in the year the loan was made. Let's assume there was a complying loan agreement, but then none of the repayments have been made. So that's where it becomes an ongoing issue for you as an agent. So what do you do in that case?
So, look, Robyn, I think we'd be looking for the Commissioner's discretion, and you can't ignore that sort of thing. And again, it sort of now becomes, I'll be very interested to see the TPB's guidelines when they come out about dob-in provision. Because is this something that is serious enough, substantial enough, that would obligate me to dob in a practitioner? And I feel really bad about that, particularly if it's more of a mistake as opposed to a systematic exploitation of tax loopholes.
But interesting with these new breach reporting rules, and we are yet to see some guidance from the TPB. So at the moment, all we've got are literally the provisions themselves. There was no explanatory statement or memorandum accompanying the amendments when they were put through the Senate. So we've literally got the letter of the law only. There's nothing in there about intent. So it doesn't talk about why you might have breached the rules or whether it was inadvertent. It questions whether there has been a significant breach and whether you have a reasonable belief that that has occurred. So what obligation are you under? And a practitioner may not want to do it, but the problem is you've got a positive obligation to report them, to dob them in. Otherwise, you face penalties yourself under.
Correct. And there is a time period for when I have to make that decision.
30 days.
Yep, it's not a long time.
It is not.
So I'm really looking forward to seeing what these guidelines say. Look, I do worry about it, and I do worry about the positive obligation it's putting on the tax profession to self-regulate. And whether that's fair.
It's interesting, in the review of the TPB, so this is the James review, there was a comment that it is for the government agency, i.e. the TPB, to regulate the profession and the conduct of agents. It's not for the profession to self-regulate.
No, it's like, I'm very busy. I think all of our members are extremely busy. To expect us to also be stopping, thinking and worrying about whether or not I should be dobbing in somebody else or face a breach myself if I don't, on top of a very busy workload. Is that really the best use of our time?
That we can see where this is stemmed from. Now, competence.
Yes.
So obviously we have an obligation under the code as tax agents that we need to provide our services competently. What happens when you act outside your sphere of competence?
I think more and more, Robyn, it is dangerous to do that. I think it's really important to understand what you know and what you don't know. So, for instance, for me, we sat through this morning a session on GST and the GST margin scheme. I would not touch advice on GST and margin schemes, but I know who to call. And I think that's really important. I think that's when we talk about the power of a network. I think it's really important to understand what you know and not venturing far away from that, because I just think it's fraught with danger. And when you practice in an area and you know that area, you know where all of the integrity measures are, you know where the exceptions and the exceptions to the exceptions and the exceptions to the exceptions and the exceptions all sit. And so you're less likely to trip up and make a mistake. When you're dabbling in an area that you're not quite familiar with, the risk is just getting too high. And hindsight's a perfect thing. So, it's very easy in 3 years' time for the future self to look back and say, why did I do that?
Yeah.
And for the client to say, why did you give me that advice? You were negligent because you didn't know about this.
So we've actually got, I can think of 4 implications here. We've got the possibility of being sued for negligence, although it has to be said that over the years there haven't been too many successful claims against accountants. We've got the risk of breaching the code, which requires you to provide your services competently.
Yep.
there is the risk of breaching relevant bylaws of the professional association, of which you are a member.
Yep.
And then we've got the other issue being the professional indemnity insurance policy.
Yes.
Which does tie into the negligence, I accept. But there's a number of matters that come up there, whether you're indeed covered and whether you're going to be going through litigation and whether there are sanctions.
Well, and that's right, Robyn. And what's interesting is over the years, from my understanding, is a lot of the claims of negligence against accountants have been in relation to small business CGT provisions, which I find extraordinary because those provisions are supposed to, be there for SME companies and practitioners, and they are some of the most difficult to understand.
Yes, they are. They are. In terms of also providing services as an accountant versus a lawyer, and this gets really important when it comes to state tax issues.
It's important when it comes to state tax issues because obviously, as a tax agent, we provide advice under federal law about income tax and GST, FBT and so on. Stamp duty, payroll tax and so on are, my understanding, are not covered by tax agent services. So we have to be very careful as accountants about how far we stray into those state taxes. I think we have to be very careful also about the documents we draft for clients, particularly if they look like an legal agreement. Now, I've seen trust deeds being drafted by accountants, and I think, I don't think I would do that.
And I think it's important just to strip this back and come back to some core principles here. Accountants are not lawyers. Accountants cannot advise on the law. And that is why we have the Tax Agent Services Act, because if not for that, then no accountant would be allowed to give advice on tax law.
That's right. So
TASA exists to allow accountants to be able to advise, obviously on the preparation of tax returns and relevant statements, but also more broadly on transactions and arrangements. But TASA is federal law and governs federal tax law, whether that be FBT, GST, income tax. But as you say, when we're talking about payroll tax, land tax and stamp duty, these are state taxes.
Yeah.
And excises would be a potential one. Excise would be federal, but some, and I call it excise because you can't have excise at a state level, but they have levies and things like that.
All sorts
of minor taxes, the indirect taxes that were all going to disappear.
Yeah.
And so advising on those is getting into very thin ice when it gets to the ability of an accountant to lawfully provide these services.
Yes, and where that becomes interesting is our clients don't expect us to be talking about it. Particularly if a client comes to us and says, "Can you look after my affairs?" That normally means, "Can you also make sure I'm paying payroll tax?"
Yeah.
So again, having somebody in your network, a good lawyer in your network who you can talk to about these things is also very important.
So is it fair to say the more we all learn about tax, the less we feel we know about it?
Look, it's really interesting. I've said that forever. The older I get, the more I say it. In fact, I was talking to a very senior tax partner just recently who was a doyen of in the industry, and he said, "Tim, the more I know about tax, the less I know." And I said, "That's exactly how I feel." My other thing I say is I don't need to know everything. I just need to know who to call.
Yeah. So quickly to wrap up, in terms of being accountable for advice that others in your practice might be providing.
Yeah. So if there's something like we can take out of the events of last year is that when you're in business with other people, you spend a long time, you spend a lifetime building a reputation, but you can be tainted by what other people do within the firm. And so I think you have to be very careful about knowing a bit about what your fellow partners, directors, business owners are doing and whether that is consistent with your own risk profile.
Yeah.
Because I think that reputations take a long time to build and a second to destroy. So we just need to be very careful and very mindful about what others in our practice are doing.
So advice to practitioners, if they have an ethical issue, what should they do? Talk
to someone. That it's amazing when you talk to someone, you start to voice it. Sometimes as you're voicing it, the answer comes to you. Like the mere act of actually saying it out loud rather than having it rattling around in your head can often resolve the issue for you. But it's surprising how many times you can talk to someone and they'll have another opinion or another approach, and you can they'll have some words of advice about how you might approach it. So that network where you can ask those questions is just really critical.
Thank you. Look, Tim, I've really appreciated the discussion. We've covered quite a lot of ground, and hopefully it's been of some value to practitioners who are wondering how they best place their next step forward.
Yeah, no, thank you, Robyn. Enjoyed it.
Thank you. Thanks for listening to this episode of Tax Vibe. I've been chatting with Tim Sandow, CTA and tax partner at BDO. If you enjoyed this episode, we'd love for you to subscribe, rate and review Tax Vibe wherever you listen. We welcome any feedback and suggestions. To catch all the latest from Tax Vibe and the Tax Institute, please join us on LinkedIn. If you're interested in being at the centre of the tax conversation, a membership with the Tax Institute could be just what you need. Stay current and connected with tangible, real-world benefits. Learn more at taxinstitute.com.au. Thanks again, and until next time on Tax Vibe.